I received an email yesterday. In fact, I shared the email with you in this morning's market plan letter that I send out to all the tribe members for free. If you want a copy of it, you just sign up down here at bestofusinvestors.com. Anyway, this letter was from a reporter for what I would call the leading real estate industry magazine in the United States. And he said he would like to talk to me, and he'd like to talk to me about Zillow and why their market cap was at $17 billion. And so I said, sure, I'm free in the afternoon. Give me a call. Well, I didn't hear from him, but as I was out on my afternoon jog in the park, I got a call from him. And I sat down on a tree stump and spent about 45 minutes with him. And in essence, he was saying, why does Zillow have a market cap of $17 billion, and what exactly does that mean? And I explained to him that what that means is the market, the stock market, the traders in the stock market are saying if Zillow came up for sale tomorrow, its value is $17 billion. Now, I explained to him that usually when that happens, though, there's a premium of some 20% on top of that. So if it sold at today's current price, it would sell for over $17 billion. And he said, well, how can that be? They're losing money. I said, yeah, they're losing money at the rate of about $500 million a year. And he said, well, why would someone pay $17 billion plus for a company that's losing $500 million a year? I said, well, first of all, you got to understand what Zillow is. And I explained to him that it's a digitalization of the MLS listings, that I, as a real estate agent, go out and get a listing, and I gather data on that listing, and I take pictures on that listing, and I give it to my broker, and my broker then shares it with the MLS, and then the MLS sells it to a number of portals, such as Zillow, and they put it out, and then they gather leads from people who look at my data and my pictures, and then they sell those leads to my competition, other real estate agents. And that's what they did. And they did that very successfully and very profitably up until roughly February of 2019, when Spencer Roscoff, who was at that time the CEO, stepped aside and Rick Barton stepped in. Rick Barton owned more shares of Zillow. He was the primary shareholder of Zillow. And so he asked Spencer to step aside, and he took over. Well, what happened at that point? And first of all, you got to understand the relationship between Spencer and Rick. They both came from, Spencer started a company back called Hotline. Hotline was bought by Expedia, and that's where Rich and Spencer came together. Expedia was nothing more than a digitalization of the travel industry designed to put travel agents out of business, which it's, for the most part, has done. So then they were bought out, and Spencer and Rich left with a pocket full of money, and they said, who else can we disrupt? Well, let's try the real estate industry. So that's where we were in February of 2019, as Spencer stepped aside and Rich stepped in. Well, what Rich wanted to do, and I think the whole plan for this whole thing always was build another company that we can sell. And you need to recognize that there are companies that start with no intention of lasting forever. They want to be sold. They want to be the plum that someone comes and pulls off the tree and says, this is going to make our life better. Well, that's what Zillow is. There was a change, though, in February of 19 as to what is the best way to get the best value out of Zillow. Spencer believed it was selling leads. Rick believed there's only so many leads that can be sold. So there is a cap there. And we need to find another way to get us deeper into the real estate industry. So Rick stepped in and said, we're going to change the real estate industry to a 3-click process. In which what he was saying is we're going to remove the real estate agent, we're going to shut down the brokerage network, and we're going to bring everything relative to the buying and selling of a house into Zillow. And his first plan was that we have to own the house when it's sold. So he started his instant offers, which has evolved to offers. And what they recognized is that in a segment of the market, the baby boomers are retiring. They haven't kept their houses up, and they have the houses that the millennials want, basically in the $250,000 to the $375,000 range in my community. So they literally started a program that said, "Hey, baby boomer, you want to sell your house? You don't want to deal with a real estate agent. You don't want to have to fix it up and paint all the walls and put a new roof on it and make it presentable. We'll come and write you a check. And you just go to our website and give us your name and your address and a little information, and we'll send a representative out, and we'll give you an offer on your home." Now, that's very appealing, particularly if you're headed for a nursing home, or if you're just downsizing, or if you're moving to where your grandchildren or whatever, and you don't want the time consumption and people parading in and out of your house. So they built a business that way. And that is the business that is costing them, losing $500 million a year. So how does that work? Well, let's take a look at the numbers. Last quarter, in the end of June, they reported that they had sold 2,394 homes for an average price of $321,266. They're showing that they paid $288,000 for that house. They then did roughly $15,300 worth of renovations. The holding cost, which would be their taxes and their HOA dues if appropriate, and paying for the electricity and the water while they were renovating the house, was $4,000. Their selling cost was $13,748, or 4.3%. Now, if you're a real estate agent, you know you can't sell a house for 4.3%, because usually the real estate commission is somewhere between 5 and 6%, and then you've got the title work, and you've got the closing attorney, and you've got inspections and all that. Well, that tells me they're taking the real estate agent out of it. They basically got a salaried employee handling that end of the business. So they come away and they sell that house, and then they pay the interest that they had to pay on the money they had to borrow to buy the house, and they lost $4,478 per house. Okay, that explains how they're losing $500 million a year. That's the business they're in. And so he says, okay, this is the reporter. I understand all that. He says, then why are they valued at $17 billion? And I said, because selling houses is not the goal. He said, what do you mean it's not the goal? Well, it's not the plum. It's not what everybody, the end result is going to reach up and take out of the tree, and that's the fruit. That is turning these 5 million homes that they eventually want to be in control of into smart homes. The biggest moneymaker in the future, to the tune of $750 billion a year, is turning those homes into smart homes, sitting down at the closing table with the buyer and giving them an incentive to put in a smart refrigerator, a smart washing machines, smart dishwasher, smart pantry, smart bathroom, 5G on all of your utilities and your heating and air conditioning system, and becoming your home advisor, becoming the person who has all the data on your home that can tell you who you need to sign up for your internet, your telephone, and your TV. Becomes your home advisor, who then evolves into becoming your financial advisor and advises you who you should buy your property and casualty insurance through, who you should buy your life insurance through, who becomes your source of all information relative to your home, all the way down to delivering your groceries and putting them in your pantry. This is the gold mine. This is what Zillow holds the ticket to make available to Amazon, Google, Apple, or Facebook. The people who need that data to fill out their silo of data so that they can make your life better, more enjoyable, and more profitable, who can save you money on your life insurance, on your homeowner's insurance, who has all the data relative to everything relative to your life and will make your life better. But they need that ticket in. And where is the best place to do that but at the closing table when you're moving from Paducah, Kentucky to Birmingham, Alabama? This is where the opportunity is to capture the badge of smart home. And that's why Zillow has a market cap of $17 billion a year. Now, would you pay $17 billion? You already told me you would not pay $17 billion for a company that loses $500 million a year. But would you pay $17 billion a year if that company could turn you into a $750 billion a year opportunity? Yeah, you would. And that's why Zillow currently has a market cap of $17 billion and is selling for $70-some a share. Now, the only thing I'm ashamed of is I bought Zillow at 45, wrote it up to 65, sold it, and then sat there and watched it go to $22 a share in the middle of March and was a sissy and didn't buy it because it's going to sell above its current market cap. I believe it would have happened if it hadn't been for the pandemic and the disruption that occurred within the real estate business. I believe it will happen as soon as we get through this virus. We already know that Amazon entered into a partnership with Realogy, which is the largest brokerage firm, and they tried to do this, but the real estate industry is a bunch of amateurs. It has a 80% failure rate of all new agents, and it's not. You can't control it. You can't control the real estate agents within the community. So that was my answer to my reporter. I don't know if he will report the story as I took it because, quite honestly, it doesn't paint a pretty picture for what is going to happen to the real estate industry in the future. It doesn't paint a pretty picture for the brokerages, the Keller Williams, the Realogies, the Remaxes, all the real estate brokerages. It doesn't paint a pretty picture for their future any more than it painted a pretty picture when Rich and Spencer went after the travel agency business. So that's why it's worth $17 billion, and that's what's going to happen. Do you want to invest in it? I'm investing in the buyers. I own all the potential buyers. I own the Googles. I own the Amazons. I own the Apples. I own the Facebooks. And I don't see anybody else buying it. So that was my day yesterday. Spent about 45 minutes on the phone. Had a delightful conversation and very anxious to see if this story makes it to print.